Alright, what's going on, guys? It's Suk here. Today I wanted to make a video kind of going over continuation trades again because I've been taking a lot of trades like this. Like this was today. I don't know when to upload this video. I might upload this on the weekend, but today was Wednesday the 25th. And I took this continuation model trade. I'm going to run through it really quick. Basically, I was willing to trade both for longs or for shorts today. I was willing to trade either way, whichever way we displaced towards. I was looking for a continuation towards. So we had this 4-hour gap right here as our main buy side draw on liquidity. So what happened today? Market opens up, displaces up towards the draw. We pull back into a 1-minute gap, which is a continuation confluence, and we get a displacement candle out of that 1-minute gap. Now, when I'm seeing this, do I expect price to continue to the buy side draws or sell side draws? Well, I'm expecting it's going to continue up because we displaced towards the draw, pulled back into a gap, displaced out of the gap, confirming that we likely want to continue up. I go break even at the 4-hour, and then I targeted 4-hour CE as my TP, and it obviously ended up playing out. We had a good day today. Obviously, it ended up going higher after, but what I wanted to do is go over, because I like this again, because I feel like a lot of people are missing entries like this because they're being too picky. So all I'm looking for with these continuation style trades is I'm waiting for price to displace towards the draw. Now the draw can be a session high or a session low. It could be like a London high, London low, previous day high, previous day low, a 15-minute high, like whatever, just important stuff. Or it can be a higher time frame fair value gap, which in this case it was a 4-hour gap. You want to wait for price to displace towards it. So let's just say I already did a video on continuations, and I'll probably put the link below, but I want to just show you guys another example because this is a real-time example where a lot of people miss this entry. So let's just say this green line here is a draw. Let's just say it's like London high. Okay, we want price to displace towards the draw. Okay, like let's say it shows confirmation that it wants to continue bullish. We want to wait for price to retrace into a gap. Now for gaps, it could be anything. It could be, I prefer usually 3 minutes, 5 minutes, 15 hourlies, like stuff like that, like 3-minute, 5-minute. But if you get a retrace into a 1 minute and the momentum's clearly bullish or bearish, whichever way you're looking to trade, you're fine with taking that. Like it's not that big of a deal. So you want price to retrace into a gap. Then you want an entry confirmation to confirm that price is going to continue to your draw on liquidity, which in this case, let's just say it's London high. So we get a displacement candle out. You get an inversion, a CASD, whatever. You take that and target the draw on liquidity. That's literally it. You just need to follow this plan right here, and you're going to be using ES as a guide. Now, I'm going to go over that really quick. So if you guys want to copy this, okay, there you go. All right. So in this case, again, this is how I'm approaching every single day. I'm setting conditions for myself. Let me put this back here. Actually, let me go on the 15-minute. So for buy side in this case, this is the 9:15 candle, okay? So this is what I'm looking at. My next main buy side draw is going to be this 4-hour gap up here. My next sell side draw is going to be this hourly low down here. So what I'm looking at is this. If we can displace lower, give me a retrace into a gap and displace out of that gap, I'm going to be looking for shorts down to here, whatever. But if we displace towards the 4-hour, give me a retrace, I'm looking for trades towards that 4-hour gap, okay? That's literally how I approach continuations. So when market opens up and it immediately displaces to the upside with that huge bullish candle on the 9:30 close right here, I'm it's very unlikely that price is just going to, flush back down lower. From here, we get a retrace into this 1-minute gap. In that 1-minute gap, we get a displacement close out of it. Now, from my back testing, from my forward testing, I know that this is a high probability that price is not going to slow down at this point. It's just going to continue to the buy side draw. I have a clear break-even point right here at the start of the gap, and I have a clear target that I can let price run to, which is this 4-hour gap. And you could have also targeted this rejection block, but I'm really not going to go over that right now. And as you can see, it ended up playing out like I already showed you. The main thing here is a lot of you guys are waiting for too many confirmations. You're waiting for, well, there's no inversion here. There's no, we didn't tap CE the gap. We didn't get a 3-minute, we didn't get a 5-minute, which is stuff that I would wait for a lot of the times. I'd prefer, like I said, a 3-minute retrace, a 5-minute retrace, whatever. But you have to understand when price is moving this aggressively off of market open, the draw is clearly higher at this point. We're displacing out of a gap. It doesn't need to slow down. How many times have you guys missed an entry because you never got the pullback? Probably a lot. So the thing is here, if everything's meeting your criteria, you're getting displacement towards your draw, you're getting a retrace, even if it's a slight retrace into a gap, and you're getting displacement to confirm that price is going to continue to that draw and liquidity, it's fine to take the trade. Okay, a lot of people right here didn't take this because they're saying, okay, there's no inversion entry, there's no, I don't know, we didn't pull back far enough, there's no inversion entry, but displacement's bullish, order flow's bullish, the draw's right here, momentum's bullish, volume is bullish. There's a high probability we're going to continue bullish, and I'm willing to, throw down on this trade. Was the delivery the best? No. But it ended up playing out. My draw on liquidity was correct. So the main thing here I'm trying to talk about is if your draw on liquidity is correct and you're correct about where price is going to draw towards, your entry does not have to be perfect. You don't need a perfect inversion entry. As long as you have displacement towards the draw, a retrace, displacement, like confirming that price is likely going to continue to that draw, and your drawing liquidity is correct, you're going to be fine, like 80% of the time. And even if you don't win, you're likely going to get break even. So if I got break even here, I wouldn't have lost anything. So it was like fine. So as long as your draw and liquidity is correct, as long as price is displacing towards your draw, gives you a retrace and confirmation, you can take this trade. You don't need a perfect inversion. If you prefer to wait for inversions, that's fine. That's no big deal. I still will trade inversions a lot of the time. So it's just sometimes like you can get away with not having to have a perfect trade. Now let's go over a trade that a lot of people ended up taking later in the session and why I didn't take. Well, first of all, I didn't take it because I wasn't on the charts at this point. I was already done. But would I have taken this trade? No. Okay, I'm going to go over this. Price comes up after, so I'm out of this trade at this point. I could have obviously held up there. It's a little unfortunate, but price comes in and it taps into this 4-hour rejection block right here. Now, if you don't trade rejection blocks, that's fine. It's something I've been looking at a lot more recently. A lot of people took this right here, okay? Now, is this a valid entry based on what I just talked about? Yes, right? We're displacing, but what is your draw? Like, you have to understand, yes, we're delivering out of a higher time frame gap. In this case, I believe it was a 5-minute and a 15-minute gap. We get this 5-minute inversion right here. It barely inverses, but it does get this inversion. I've seen a lot of people take this entry right here. They ran their stop, I don't know, like here. But it's like, where are you targeting at this point? You know what I mean? Buy side has already been taken out. We already tapped that 4-hour gap. We already took out a ton of buy side. We took out this high. Yes, we do have highs above, like 100% we do, but there's just times and circumstances where you know that the objective's already been taken out, and taking a 5-minute inversion is probably not the best idea. Now, if this was, say we hadn't tapped into this rejection block and this move was happening right here, we came back in, tapped in this 5-minute gap, we got a nice 3-minute inversion out, and we still hadn't tapped this rejection block, then it's like, okay, perfectly, I'll take that long all day. But after we just tapped into that, we've already swept out a ton of buy side. We're getting this retrace textbook mechanically, like this does look good, but you have to look at the context. Like, there's different times where these aren't going to work and where they make sense and where they don't make sense. Now, what I've been finding recently is that 5-minute inversions and like really don't work good a lot of the times. A lot of the times I feel like I prefer the 1 to the 3-minute. That's where I'm finding my best trade entries based on what I've been watching. And every time I've ever looked and forward tested or even just like watched a 5-minute inversion play out, I usually just end up fading it. I used to take them a lot like a couple months ago, but it just doesn't work out. Like, I don't know what it is, but yeah. Anyway, this trade today, like, we look at ES at the same time. If you look at ES, I don't know. You have to understand, like, when you're looking at ES in this case, ES just doesn't look like it wants. Yes, it's continuing bullish. Like, I understand that, but it's just at the point where it's just, I don't know. Do you really want to long this? And do you really, I don't know. Just based on experience, it just doesn't look like it's going to continue higher. So, I don't know. You got to always look at ES. Like, it just, we tapped into this rejection block. Like, it's just really not like a great, mechanically, like, on paper, like whatever you want to say, like, it does look good, but it's just not something that I would take. So what I'm looking for, because I feel like at this point the objective's already been taken out. So what I'm looking for again is I want to see price. All I want to do is see, we have a draw on liquidity here. Let's just say it's a sell side draw. Let's just say we want to target a low and pretend there was a low right here. I want to see price displace towards the low, to confirm that it likely wants to continue, I want to see price pull back into a gap, 1 minute, 3 minute, 5 minute, 15 minute, whatever. And I want to see displacement or an inversion or a CISD out of that gap. And then I want to target that draw on liquidity, because it's going to confirm at that point that we're likely going to continue lower. But do you need to necessarily look for the highest time frame inversion? No, because a lot of the times you're either going to miss the entry, or it's just not going to be high probability. Like usually when I look for these entries, like you see in the trade that I took that 1 minute bullish close. It was clear. The volume was clear. The volume was high. We were clearly displacing towards that 4 hour gap above, and it just ended up working out. So all you really want to make sure is that volume's in your favor and that price is kind of confirming to you that it's going to continue that draw on liquidity. So I wanted to just come on here and make this quick video that a lot of you guys don't need to really wait for some of these inversions. Although I do still trade inversions. I'm not saying I don't trade inversions. I still use them all the time. But I just found that a lot of the times these 5 minute inversion plays like don't really hit that much. And a lot of the times I felt like I was missing setups like the trade I caught today, like this trade I caught today, because I'd be waiting for an inversion and there was no inversion. So a lot of the times, guys, if you guys have displacement toward the draw, retrace into a gap, displacement out, and you have a clear draw, if your draw on liquidity is correct, you're going to, win a trade most of the time, or you're going to at least get break even. So sometimes I think I'm just trying to encourage people you don't have to necessarily always wait for that inversion. If you have a displacement entry, a CISD, just something to confirm that you're going to go in the direction of your draw. And as long as your draw is correct, you're going to be fine majority of the time. So that's it for this one, guys. I don't know when I'm going to upload this again, but I just wanted to make this point clear. Be willing to, kind of just react to what the market's giving you. If market's clearly displacing one way, the draw on liquidity is clear, don't be afraid to try different entries. I mean, if you want to stick to inversions, it's fine. Obviously, there's no big deal with that, but something to backtest if you guys want to, expand your kind of trading. So that's it for me, guys. Just wanted to knock this quick video out. Thought it was just something I wanted to go over. People were asking me about, but anyway, that's it for me, guys. I'll talk to you guys in the next one. Peace.